So look, I was talking to a lawyer last week who actually told me that M&A volume for him, looking at his pipeline, looks quite strong going forward this year, even if some of the numbers that we've seen have maybe been a little bit disappointing for people that thought the Trump administration was going to come here and we were going to see deals all over the place with a lax regulatory policy. What does your pipeline look like?
So Alex, it's been an interesting year. Our pipeline is actually excellent. We are lucky enough to work on the deal announced this morning, and we have lots of other deals in the pipeline, many of them for new clients that we've never represented before, so that's very exciting. I'll say it's been an interesting year. Obviously, the administration was greeted with a lot of optimism in the markets. I think there was some expectation of tax reform, expectation of healthcare overhaul, and frankly, just a view that we'd have overall a more pro-business environment. As we all know, things got off to a rocky start, and in some ways that caused companies to take a little bit of a wait-and-see attitude. But I think if you look more broadly, the factors that drive M&A and that have driven M&A for recent years, companies having low to moderate organic growth, so viewing M&A as a source of growth, financing being available on favorable terms, notwithstanding Fed rate increases, and overall continued pressure from activists, those continue to drive M&A and have driven a lot of activity that sometimes doesn't get fully picked up by the overall deal value statistics.
So I'm curious, if we're going to see a bigger second half of the year than a first half, is it possible that what's happening here is that companies which may have thought that with an incoming Trump administration, they were going to see tax reform, they were going to see an obvious demonstration of looser regulatory policies, is it possible that these companies are thinking, I don't know if we're going to see any of this stuff in the near future, so you know what? Let's just move forward anyways. Let's not wait around, and maybe the wait has caused M&A volume to be pretty flat, whereas in the second half of the year, we're going to see things go gangbusters.
Alex, I think that's totally right. Going back to the optimism, I think notwithstanding uncertainty, I think folks are still optimistic. If you just look at last week, we had the huge sell-off in the middle of the week when things were, again, there was a lot of press around the administration, but the markets steadied and recovered pretty soon. So I think the markets and deal makers' bias is to be optimistic, and the factors I talked about before that drive M&A help that. And then second, I think you're exactly right. I think if a deal has sound industrial and financial logic and it really makes sense to put the companies together, I think CEOs and boards are prepared to say, well, there comes a point where if this is the right deal and it's available at this time, and a deal being available and actionable is often so important, I'm not going to wait for some external event, and I'm going to move forward and do the right deal. And I think this morning's announcement was a great example of that.
So you mentioned the sell-off last week. I'm curious, as you speak with CEOs and boards, what is their sense of valuations in the market? Do they feel like now is the right time to buy, or do they feel like targets are maybe a little rich?
Valuation is an interesting thing, particularly if you're talking about a company looking at a big deal, which often involves issuing a lot of stock. You can look at valuation in multiple different ways, and while you could say, well, the company I want to buy is overvalued and their stock is expensive, if you're using your stock, you're perhaps getting the same benefit of that valuation boost. So I think it's much more about relative valuation and do the companies feel like they can together support the existing multiple or even a higher multiple. And I think what also helps is I've been doing this for over 20 years, and managements and boards have become so much more sophisticated about M&A. Boards today understand their company's standalone plan, their standalone strategy, and really understand where M&A fits into that strategy. So I think they're just much better prepared to consider transactions and move ahead on transactions, sort of notwithstanding what's the specific multiple, what's the specific premium the day we announce the deal. I think they think about it much more deeply now.
We just showed a couple numbers there on the chart showing financials and energy, some of the sectors that are up so far this year. Technology down a little bit, a couple other sectors also down. As you look at your pipeline, are certain sectors hotter than others, or is it pretty broad-based enthusiasm moving forward?
I really see great activity across the board. If I think about what deals I'm going to spend time on when I get back to my office today,
What are they? You can just tell us.
Yeah, sure, of course. Yeah. There's deals involving media, energy, consumer products, healthcare, technology. It's really across the board. So I don't think of this as a period where there's sort of a particularly hot sector or cold sector.
One area, though, where I would imagine we might see some volume decreased, although correct me if I'm wrong, is incoming interest from China, just given all the regulatory issues, both in China and in the U.S. Is that fair, or has the appetite for investment into the United States not necessarily gone back maybe as much as I think?
We certainly have had a lot of developments involving China over the last year. I've traveled to Asia 4 times in the last year, and it's an area where I spend a lot of time. And you're quite right. Sort of on the Chinese side, there have been some new rules being put in place, and certainly on the U.S. side, China continues to be a focus of CFIUS and in Congress and certain folks in the Trump cabinet. I would say this in some ways mimics what we were talking about on deals before. I think deals that make sense and there's a logic behind still can happen. I know the Chinese buyers who have experience doing cross-border deals, are sophisticated, and who have targets in the US and Europe that really make sense for them. They're still very actively looking at those deals and don't feel discouraged by the regulatory environment about moving capital out of China. And then similarly on the US side, certainly any Chinese buyer will have to analyze how scrutinized will I be, what's the space an industry my deal is in. But putting aside the most sensitive industries, I think a Chinese buyer that sort of plans ahead and analyzes the U.S. regulatory environment and has a proactive strategy to address it can still be very successful.